Okay, it's been a very slow day. The markets fall and markets rise, but today has been a bit of a grind. The short trade has worked today, not by a lot, but for whatever it's worth, down 50 points on the Nifty thereabout, down about 200 points on the Bank Nifty. And what's really not helped the market is that the leader of the market, which is the corporate banks, they have fallen today. ICICI and Axis, both of them at the low point right now. So let's see, weekly options expiry could be interesting. This is closing bell. I'm Anuj, with me Surabhi. Hi Surabhi. Good afternoon.
Good afternoon. It's like dead heat, Anuj. Nothing really is moving unless this slight decline that we just started seeing, unless that accentuates into something more in the next 1 hour. But I totally take your point. I mean, the momentum has been with the corporate banks, and they've chosen to take a bit of a pause. But I also remember what you're always saying. I mean, whether the fact that we're approaching the highs of the range itself is telling you that the long trade for now is over, or whether this is maybe just a pause and we see a new flourish then.
I don't know. I think perhaps this is going to be that kind of a year. You'll have to stock up on your green tea and coffee, whatever is your drink, because look at the volumes. It's just very very slow move for the market, and I think up until perhaps April, May, when you'll have the general elections, you'll have to negotiate with these. You'll have to negotiate with small trading ranges. You'll have to negotiate with slightly bigger trading ranges. The market is not in a mood to have a breakout. This morning we were discussing how Bank Nifty was close to lifetime high. Perhaps that's reserved for some other time. Also the weekly options expiry today, that could be playing a bit of a spoil sport. The mid-cap index, yes, the index is in the green, but advanced decline is about 1:1. I think it's really just been a day where not too many stocks have moved. Even advanced decline at 1:1. And I think whatever move you had perhaps was in first hour. Yes, I take the point on the corporate banks. They are slipping a bit. I think IndusInd, after yesterday's late recovery, the way that slipped today, is telling you that the market perhaps is concerned that perhaps in hindsight it would have been better if they had done more. Just like Bandhan did today. And I mean, in case of Bandhan, you had a decline first and then a rally afterwards, because it looks like they have at least provided more. So the market always likes the fact that you're taking a bit of a bath and then moving on. So that perhaps explains that the divergence that you've seen today between IndusInd and Bandhan Bank. But for whatever it's worth, heading into a weekly expiry, it looks like 27,500 Surabhi is the fulcrum for this week at least. Okay,
that's where we seem to be on the Nifty Bank, on the Nifty as well. It's that decline that we were just speaking of. It's not like as if suddenly it's really breaking out on the way down either. Some buying on auto stocks that have been badly beaten, and some selling on corporate banks that have been rallying. That really sums it up. Let's get started. Here's what's lined up on closing bell today. Volatility hits the market in the last couple of minutes. Market is right now just off the lows of the day. Banks like Axis, Kotak Mahindra and ICICI drag down the Nifty. Mid-caps outperform marginally. Bandhan Bank in the green despite a jump in NPAs. We'll be discussing a lot of these trends with the fundamental experts. We have with us Deepak Shenoy of Capital Mind and member of BSE and NSE, Deepan Mehta, today. So they'll weigh in on a lot of these stocks and these factors. Now, is it a good time to think of buying cyclical stocks? We ask that question to the man who manages an infrastructure fund at Kotak Mutual Fund. Harish Krishnan, fund manager at Kotak MF, joins in. And not just that, one more fund manager view. Other sectors and stocks that you can perhaps watch out for in this period of volatility. Krishna Sangvi, head of equities at Canara Robeco Asset Management Company, also joins in. And of course, along with that, lots of trading ideas coming your way with our technical experts, Ashwini Gujral and Mitesh Thakkar.
Okay, how should you position yourself in this last hour of trade? Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon, Ashwini. Your thoughts first. The market almost at the low point right now. What's the call for last hour, and what about individual stocks?
Yesterday, that last hour rally, I had told you, don't get overexcited, because that was just bulls, getting protected by the scruff of their neck. And today, the real decline happened. Now, one day is a bad day, could be a bad day, and very next day we've seen often, there's another attempt at a rally, and if bulls can get enough strength, generally one-day corrections happen in strong trends. For the moment, I believe that this is a one-day correction, and either you can buy right now or tomorrow morning. But given the strength of the corporate banks, they will just not go away like that without a fight. So my sense is all of these corporate banks, ICICI, Axis, etc., this is the decline you want to buy, and often these things turn around and come back the very next day. Having said that, today mid-cap PSU banks have been in the green, so chances are buying is already happening there, and that kind of gives you a lead in terms of what can happen tomorrow. So that way, Titan is a buy with a stop of 955, target of 980. PNB is a buy with a stop of 79, target of 86, and BOB is a buy with a stop of 120, target of 132.
Okay, yeah, Titan is definitely shining bright in an otherwise very dull afternoon, and that's one of the buy stocks for Ashwini. Mitesh, good afternoon. Dull kind of a day. What are you working with now?
Yeah, good afternoon. So I think, as I've been saying, the market still is in contraction mode, and therefore I think we're not seeing a decisive trend movement, though there has been some volatility in the last few days within that range. But a breakout or breakdown has not happened, and I still am not very clear as to which direction I think, the eventual move will happen. But for the time being, we are keeping counters of 10,750, 725 to about 10,880 on the Nifty, and the calls which I have are a buy on Titan with a stop at 944 for targets of 995. Clearly that's on my radar as well. And Bosch, some intraday charts are turning positive, so buy with a stop, a very tight stop at 19,400. Look for a first target of 20,000.
Okay, for whatever it's worth, it's a bit of a buying in the Nifty bank from the low point. Last 10 minutes, there's a bit of a buying. I think about 60 or 70 point move is what you've seen on the Nifty bank right now. But let's see if that sustains, because it's been quite dull. Deepak Shinoy of Capital Mind is with us now. Deepak, hi, good afternoon. A lot of stocks moving, but I wanted your thoughts first on Bandhan Bank. And in fact, both Bandhan and Group. Have they corrected enough now to perhaps warrant a relook in the portfolio?
Yes, good afternoon, Anuj. I think the Bandhan Bank Group merger, of course, it seemed to have come out of the blue, but it's probably an expensive way, according to me, for Bandhan promoters to reduce their shareholding. My view on Bandhan in that case here is the shareholding issue can be resolved only about by 2020, because RBI has these strange rules, so they cannot go below 40% according to one rule, and they cannot be above 40% according to another rule. So they have to be exactly 40%. So that's kind of difficult, and because of structures till August 2020, they'll probably have to keep sticking around with what they have. They've reduced it to 61% in this merger, and I think the merger gives them a lot of synergies outside of the geographical areas that Bandhan is concentrated in. Now both these companies are extremely expensive. The resultant company will obviously be expensive. My estimate is at these prices it's still valued at about 6 times book. But here's one thing that I'd like to say, when you have ROEs of 30% like Gru has, you're valued at 10 times book. If you have ROEs of 22-23% like Bandhan has, you're valued at about 6 times book. When you're at ROEs of about 18% perhaps like HDFC Bank, you're at 4.8 to 5.5. So if you look at the combined entity, and perhaps the ROEs there will be around 24%, I would still feel that a 6-time book is probably justified in the current market scenario. And if you look at Bandhan's results today, their the pre-provision of ILFS, which I'll come to later, but before the provision, they've grown more than 70% or so. It's almost like a ridiculous growth. 900 crore pre-profit, pre-provision, pre-tax profit, which is amazing in terms of growth. At those rates, your book value will grow substantially fast enough to bring down the price to book to 4.8, 4.9 in a year and a half. So I think this does look like a relook. I think the stock may have more to fall based on any more announcements and all that come across. But I'm also quite impressed that they wrote off 100% of, or they provisioned for 100% of the ILFS exposure that they had. in one quarter itself, which is quite remarkable because when it comes back, and some of it is going to come back, I think that will add to profits in a later quarter. So this is also a very good strategy by them.
Deepak, good afternoon. And that brings me to exactly how IndusInd Bank has handled the same situation on IRNFS. Now, yesterday the stock got a little excited. It seemed that, it wanted to read the positivity into what Mr. Sopti was saying. And here's that one statement that, we have provided more than even a non-standard asset needs to be provided in this quarter. But clearly, the morning notes were suggesting something else, that the 600 crores is not adequate. Obviously, the account is not even an NPA. But with IndusInd Bank, what would you do right now? Would it be a buy?
So again, I think IndusInd, again, as a disclosure, we are interested in the stock. But one thing that we look carefully at was they have two kinds of exposures. One is to the Chennai Nashri tunnel in J&K, and a couple of, I think, smaller exposures in other projects where there's senior secured creditors. Where the assets will still likely be NPA because they're not getting paid, but the payments are still sitting in an escrow account from which they will get paid once the NCLT, the transactions are over. Those assets are working for them. So that's about 1,000 crores of exposure. The remaining 2,000 is this, working capital or, pre-rights issue loan that they gave. I think that was a little, an absurd loan at that time, but I guess everything in the past looks absurd when it comes to that. But that part is, I think, where the trouble is. They've probably provisioned about 550. They'll probably need another 450 in Q4. They've said they'll provision about 50% of that exposure and expect to recover 50%, which makes sense. So next quarter's results will also be subdued. But if you take away this provision and if you take even write off, mentally from reserves and take away the thing from the book value completely, it still doesn't make IndusInd Bank substantially expensive, and the growth of the book beyond this level is still quite substantial. We're talking 30 odd percent growth or close to that in pre-provision growth. So I think there also is but that's going to last a little bit longer. I think that's going to take about 6 more months for normalization compared to Bandhan. So IndusInd does have more trouble on that front, especially because in Q4 it is going to become an NPA. Their NPAs are going to go up 2x at the end of Q4, gross NPAs. But they will do a lot more provisioning, I feel, in the last part of the year. So the net will probably still be manageable. It's optical according to me because mentally you have to write that amount off and then see if the book value multiple still makes sense, which in IndusInd's case, specifically because it's growing so much beyond it, still does.
So one wonders why wouldn't the management just do something like that right now, because they do have enough growth coming in from other assets. But anyway, that is IndusInd Bank. By the way, watch out for Hexaware. There's been a bit of a quick fall on this one stock. Its other peers are still holding okay if you're looking at NIIT Tech or Tata Elxsi. This is just a sort of more a Hexaware story at this point in time, the fall that's come through. Around the 10,800 mark on the Nifty, not much has changed over there. Some pressure on a stock like HDIL, which is down about 0.5% as well. So these are just odd names. Otherwise, trends are hard to find. By the way, the fertilizer pack, the only one trend, if it's kind of stood out clearly through the day, is the fertilizer space. Most of those stocks are well and truly in positive territory. We'll talk about them in a bit. But first up, more trading ideas for you. Sandeep Pagle is with us. Good afternoon, Sandeep. Have you managed to find some stocks that are moving on the screen?
Afternoons will be a little difficult, but yes, there is one sell and one buy. A sell in a DLF, stop loss of 185, target 174, and a buy in a Manappuram Finance, stop loss of 96, target 102.
Yeah, DLF is the one which is seeing a bit of a decline. Now, this is the news that you're seeing from agencies, SBI said to select banks for institutional share sale, is exactly the same point we were discussing with the MD of
in the morning, yeah.
The bank. I mean, she did confirm it was going to be an equity issue, obviously, and that puts a bit of a cap right now on the stock. But let's see. Deepak, your thoughts on SBI? It's now trading above 300 after a long time, but obviously there's going to be this large equity issue. How do you approach the stock now?
So I think, SBI has been, I think the whole PSU bank pack is moving largely, I think, on account of expectations really of, some changes in the PCA architecture or something like that. But I think we've got to wait a little bit. There will still be announcements for other public sector bank mergers after this whole Bank Baroda thing is complete. And SBI in general, I feel there is going to be more trouble because they will be lead lenders in some of the other newer potential NPAs that are seeming to come along. So I know that every time SBI results come, we keep hearing the word, the worst is behind us. I don't think I will say that now until the results actually show it. So let it come, and then there will be enough time to pick it. Fundamentally speaking, I just want to avoid any more disappointments in public sector banks. Just wait till the results actually hit us and then make a decision.
Okay, all right. So they've really tested your patience, Deepak, I guess. Okay, one pocket, Deepak, that we want your views on is insurance. Let's actually pull up all the stocks, life as well as non-life. Everything is moving and there's just too much going on. Let's just pull up the stocks, HDFC Standard Life, SBI Life, ICICI, even ICICI Lombard on the general side. There's just lots of excitement around many of these insurance names. Deepak, help us pick. It's a new space. So where do you see the maximum opportunity?
Yes. So, Surbhi, my view here is there is a difference between life and non-life. Non-life, according to me, is a little more exciting. In general, in terms of growth, I think a lot more can happen over there. We have barely scratched the surface in terms of penetration. However, in life, I feel the valuations are very, very rich. We are looking at 4 times, 3 times embedded values. I'm not sure that is, with the same penetration levels as India. China's insurers trade at 1 to 1.5 times embedded value. So it's not really evident that growth from a premium perspective itself is that much to kind of give the triple times China kind of growth valuation numbers. And I also feel that while temporarily there is a benefit, because insurers, if you invest through insurance in a life insurer, you actually don't pay those 10% capital gains tax which you would pay if you went through a mutual fund. So that, I think, is a temporary bump up for life insurance companies, especially in ULIPs and so on. But I don't still feel, even with that the premium growth justifies this kind of valuation. Longer term, I feel we want valuations to come down, and it's not easy to decipher accounts because the profits are actually loaded towards later times. But I personally feel embedded value multiples should be of the order of maybe 2 for us to really take a call there.
All right, Deepak, we leave it there today. Thanks a lot for joining us. Well, on that note, let's welcome Harish Krishnan, Senior Vice President and Equity Fund Manager at Kotak Mutual Fund. Harish, hi, good afternoon. I think we're talking about the first time this year. So first of all, Happy New Year to you. Your thoughts on how to approach 2019? The start has been fairly muted.
Happy 2019 to you and to all your viewers as well. So this is that point of the year wherein we try and give forward guidance for the next 12 months, knowing fully well that our track record as far as predicting near term hasn't been that great. So with that caveat, the thoughts really that we have as far as 2019 is concerned is the following. 2018 was extremely volatile year. I don't think that 2019 is going to be very different. It's going to be a very choppy year for sure. However, I think there are a few differences that start to emerge between 2019 and 2018. One, of course, the starting point of valuations have moderated quite significantly. 2, I think we saw a significant amount of over ownership into mid caps and small caps as we entered 2018. We've seen a significant amount of that going away, and therefore, in contrast, we are slightly more positive on well-run mid-cap and small caps at this point of time than we were at 2018. Third, from a thematic perspective, I think there are a few very high quality franchises which did exceedingly well, which were extremely richly valued and continue to hold their ground. We would think that that may not necessarily be true in 2019 and beyond. I think there is a significant overpaying of quality at this point of time, and the cyclical earnings are starting to improve. So there are a few sectors that that we are starting to turn more constructive on. Notably that on the infra side, be it on engineering and capital goods, on corporate banks after a long period of time, that is something that just started already reflecting in stock price movements over the last 3 months or so. But incrementally, that is a space where earnings will start coming through. And overall investment climate, be it on the private capex side, is something that we are looking forward to. So I think from a consumption over-dominant consumption theme, I think we're starting to move into a bit more broad basing of the market, a bit more into infra and allied sectors of infra, be it cement, be it overall the capital goods space, and a little less into consumption. So, and of course, with a lot better, broader markets in 2019.
Harish, yes, you're the man who manages money in the infra fund, so I guess you'd be keeping your ear very close to the ground to see if those green shoots are really coming up. And that really is my next question, because, we're getting sort of mixed numbers here and there. I mean, the other day, the CMI data was raising some doubts. Some of the companies, for instance, we were speaking to Thermax, they do talk about how capex seems to be reviving. How are you playing cyclicals now? How do you break it down? And what specific part of infra or cyclicals would you put your bet on?
Sure. So I think, the broad base of infra has got 4 engines. The first engine is government capex. The second is private sector capex. Third is housing, and fourth is PPP. So if you break it into the construct of how each of these 4 engines are firing, clearly government capex is been on a significant roar over the last 3-4 years. And I think, we can't expect a 20-30% kind of a growth every year given the fiscal space that the government is in. But we should be looking at somewhere anywhere between the low double digits as far as the government capex is concerned. Private capex is the space where incrementally we are turning more positive. Yes, we all know that over the last almost 6-7 years, private capex has been in a complete lull. Barring possibly telecom, wherein you've got one large company which has done significant investments, there haven't been any major private capex announcements. But incrementally, if you look at a few large sectors, be it into refining, where you've got state-owned companies going into newer forms of capex, be it in terms of fertilizer, where you're seeing new round of capex, be it in again in the space of telecom, of course, you're going to continue to see capex, even in steel and cement, and to a certain extent even in certain allied FMCG, etc. So we're starting to see capex coming through in the private side. Housing is unfortunately still a 2-track market for us. The urban centers still, our sense is that it's going to take some more time. And PPP is a long way off. So it's still a long way for all the 4 engines to fire. And one may say that, when all of them fire, possibly one should be getting out of such a theme, because, all the engines have already fired. But from, say, just one engine firing, are we in a process of getting to, say, 2 engines firing? I would think that 2019 potentially could be that year.
Okay, fair enough. Coming to the other side, IT forms a significant part of your blue chip fund as well. I mean, if I remember the numbers, it's almost 12% of the total corpus. What are you expecting this year from the majors? And again, in terms of bias, would it be more a year of the large cap IT titans, or do you think mid caps will do better this year?
So I think, IT, while we have a large position, I think in contrast to the benchmarks, we are quite underweight over there. But having said that, I think by and large, we would expect the large cap IT names to continue to maintain the performance that they have seen in 2018 or FY19, which is in the higher range of single-digit growth numbers in constant currency basis. Unfortunately, the rupee tailwind that they enjoyed in FY19 would possibly come off. So it's more a question that you've got a few of these companies which are going to announce their buyback programs. There is certain amount of capital allocation, but I would think that are we going to see an acceleration of demand environment coming in IT? I don't think, given whatever we are hearing in the global world, be it of trade wars or of global liquidity coming down. I don't think that 2019 is going to see a material acceleration of demand for us to get significantly excited at this point of time on global tech.
Okay, so perhaps just a neutral sort of a call on IT, that's what you're going with. Overall on the market, as we're heading to elections, Harish, are you looking at a lot more volatility, or are you expecting this dead heat to continue? I mean, a day like today and the market being absolutely trapped in a 300, 400 point range on the Nifty, is that going to be the order of the day?
I wish we could have a far more informed insight into near-term movements. Our best guess at this point of time is that volatility is going to increase ahead of the elections. But our simple sense is that I think 2019, while we seem to be fascinated by this idea of elections dominating, I think 2019 is going to be a lot more global macro that's going to impact even Indian equities. I don't think I think we need to spend a lot more time focused there because the flood of money, there are a lot of negative data points that are starting to emerge globally. How much of bad news eventually becomes good news? By that what I mean is, when do central bankers start blinking again and unleash another wave of quantitative easing? I think those will have far more bigger repercussions on overall flows to Indian equities and therefore overall price action as well. So yes, in the near term, our sense is that there will be a far greater choppiness in markets at this point of time.
Okay, all right, Harish, we'll leave it on that note then. Thanks very much. Season's greetings to you. Have a fantastic 2019. Okay, looking for some action somewhere on the screen. Okay, finally I find a bit of it. Shoppers Stop, for instance. Let's get the intraday graph going on Shoppers Stop. Some stocks at least are moving around. And GET&D is quite excited. That's days high on Shoppers. GET&D is also quite excited. Actually, as is AstraZeneca. Basically, what I think has happened, Anuj, maybe is that this Lind India delisting, I don't know whether it's generally getting some excitement back in the MNC names. But some of these MNC names have found some takers, at least today.
Yeah, I think keep an eye on NCC. I think this shareholding pattern has been flashed. And Rakesh Jhunjhunwala has bought additional 80 lakh shares in the stock of NCC. Just looking at the shareholding pattern, it's gone up quite a bit. And from 5.67 crore shares, it's gone up to 6.47 crore shares. So we just want to keep an eye on that. I think you were looking for some kind of excitement.
Yeah, at least there's something moving on the screen now.
I think there's something moving on the screen because, and I think it's corrected quite a bit from the highs. And perhaps that's the reason that, and this is, of course, official stock exchange data that we have right now. So that's a stock which is moving. 3 p.m. move didn't really take place on the Bank Nifty. So, the equilibrium was somewhere around 27,500 to 600. It looks like we are in that range for now. Ashwini Gujral and Mitesh Thakkar with us for BTST calls. Ashwini, you go first. Thoughts on index and your individual stock calls?
See, today, interestingly, this Nifty Next 50 is up 100 points. And that too on a day when Nifty, Bank Nifty are actually negative. So my sense is that probably as the Nifty, Bank Nifty are sideways, you could actually have some of the mid caps moving up. That's where the calls are. I think Century Ply is a buy with a stop of 175, target of 190. GT&D is a buy with a stop of 305, target of 321. And Bata is a buy with a stop of 1150, target of 1185.
Okay, so 3 buys on Ashwini's list. Mitesh, what are you working with now?
I have 1 buy and 1 sell. I have on Divi's Lab a target of 1560 and a buy with a stop at 1487. And Hexaware is a STBT call, maybe a 1 to day kind of call. Keep a stop at 325 half. Look for 312, 311 as your target.
Okay, those are some BTST calls. Divi's Labs is interesting, by the way. Just pull out that stock again. And you know what? You're making this point. I think it was about 10 days back on Divi's Labs. Even though the stock was close to its highs, the fact that it's now classified as a large cap stock. You know, there's this SEBI's classification where the stocks will rotate.
6 monthly classification where market capitalization changes.
Where the market capitalization changes. I think the fact that Divi's moved into large caps, I think that is a move which should have been preempted last week, but I think that's playing out now because you know you're starting to see quite a bit of buying. Today is genuine buying. I mean, it doesn't look like just F&O positions because if that was the case, they would have been off by now. But you know, genuine buying is what you're seeing on Divi's Labs.
Oh, absolutely, Anuj, I take that point. In fact, this 6 monthly classification can become interesting for some stocks because now the definition of a large cap, mid cap fund is very watertight and very clearly defined.
Exactly, and that is why you know I think. And this is how the market is going to give you strategic opportunities from here on. You know, you'll need to figure out which are the stocks which will move because there's going to be forced buying or forced selling in a lot of these names.
Absolutely.
You know, when the first time it happened, the first round of mid-cap correction was actually induced by this because you know, a lot of stocks were moving from mid-caps to small caps.
You had to have that mandate of 60% of the mid-cap, which is the first 250 stocks.
Exactly. So now I think you know, it's going to be interesting, but that's I think one area where you know you can work on going forward. Every 6 months there would be an opportunity.
You know, interestingly enough, if I remember the fact sheet correctly, we have a fund manager who actually likes Divi's Lab. It is you know a key holding in their portfolios. Krishna Sangvi, head of equities at Canara Robeco Asset Management, is now with us. Krishna, thank you very much for joining in. Season's greetings first of all. Wish you a very happy new year. So, since we're talking Divi's, I mean, I don't know if you can get into individual stocks or not, but just your thoughts. I mean, some of these large, you know, high pedigree pharma companies, how do you look at it as a sector, or is this only a sporadic sort of inclusion for you, or is there a bigger turnaround that perhaps you're envisaging for pharma in 2019?
No, I guess obviously we can't speak about individual stocks, but at the same time, when you look at large pharma as a broad space, you'd like to differentiate between some companies which actually basically focus only on pure Indian markets, some companies which have India business as well as an international business, perhaps more driven by US generics, and there are some companies which are focused more as as a provider of raw material, or you call it API kind of things for other customers to buy and then sell to the end product.
Okay.
It's a combination of these. There are
Krishna, I'm sorry to interrupt and come in over there, but the finance minister is addressing the press after the GST Council meeting. Let's find out more.
और जो छोटे व्यवसायिक हैं, चाहे ट्रेडिंग में हो या मैन्युफैक्चरिंग में हो, वो बहुत कम प्रोसीजर्स के साथ इसका लाभ उठा लेते हैं, और इसमें जीएसटी का जो रेट है वो बहुत कम, मिनिमल है, 1% का, 1%। तो पहले हमने निर्णय लिया था कि एक्ट अमेंड कर दिया था कि जिसके तहत कॉम्पोजिशन की लिमिट 1 से 1.5 करोड़ रुपया कर दी थी। पहला निर्णय आज काउंसिल ने लिया कि 1 अप्रैल 2019 से कॉम्पोजिशन की जो लिमिट है वो 1.5 करोड़ रुपीस तक होगी, 1 करोड़ 50 लाख तक। और क्योंकि कॉम्पोजिशन स्कीम का लाभ उठाने के लिए कई छोटे व्यवसायिक आए हैं, तो इसको बढ़ाने का एक ये लॉजिक था। 1.5 करोड़ करने का दूसरा लॉजिक भी था कि पुरानी एक्साइज स्कीम में 1.5 करोड़ तक उनको छूट थी एक्साइज से, तो इसलिए जीएसटी स्ट्रक्चर में उसको एट पार 1.5 करोड़ ले आए और उस कॉम्पोजिशन स्कीम को अगले फाइनेंशियल ईयर 1 अप्रैल से 1.5 करोड़ कर दिया जाएगा। दूसरा निर्णय कॉम्पोजिशन के बारे में ही था कि जो लोग कॉम्पोजिशन स्कीम में जाते हैं उनको टैक्स तो अपना क्वार्टरली देना पड़ेगा, लेकिन सिंप्लीफिकेशन की दृष्टि से उनको रिटर्न अब साल में एक बार देना पड़ेगा. So for those who utilize the composition scheme, from 1st April onwards, it will be quarterly tax payment, but only one annual return. So this takes off a lot of compliance burden from them. The third decision, also for composition, is relating to the services sector. Under the service tax regime, there was no composition in the case of service tax. But a large number of services are provided by people in the informal sector, and therefore for them to undertake the compliance burden if they want to come within the tax net is quite cumbersome. And therefore those who are providing services as also mixed supplies, goods and services, will now, with a turnover up to rupees 50 lakhs, be entitled to the benefit of a composition scheme. Because in services, there are no comparable inputs as in the case of manufacturing or trade. The composition rate for services has been put at 6%. So upon a 6% payment, those who render services up to rupees 50 lakhs or render mixed supply services and goods. Let us say an electrician coming to a house, a plumber, or any such services in whichever sector, it could be IT, it could be any form of services, would be entitled to a composition if the turnover is up to 50 lakhs upon payment of 6%. This 6% is lower than the average service tax which was being paid, or the average GST which was being paid by service providers up to a 50 lakh limit. The other important decision was in relation to the exemption limit for GST. Under the original GST structure, when we envisaged it 1.5 years ago in July 2017, the GST structure provided those with a turnover up to 20 lakhs with an exemption. कि जिनकी 20 लाख तक टर्नओवर थी उनको हमने एग्जेम्पशन दी है. और जहां तक नॉर्थ ईस्ट और हिल स्टेट्स थी उनकी एग्जेम्पशन लिमिट 10 लाख तक थी. लेकिन उन नॉर्थ ईस्ट और हिल स्टेट्स में जम्मू कश्मीर, आसाम और अब धीरे धीरे कई अन्य स्टेट्स ने भी अपने कानून अमेंड कर लिए और अपनी लिमिट को वो 20 लाख पे ले आए थे. तो ये तय हुआ कि वही ट्विन स्ट्रक्चर चलेगा. अब दो प्रकार की एग्जेम्पशन लिमिट्स होंगी. पहली वाली का स्लैब 40 लाख होगा, यानी कि जो 20 लाख था उसको डबल कर दिया गया है. तो जिसकी 40 लाख तक टर्नओवर है, अगर वो जीएसटी चेन का बेनिफिट नहीं क्लेम करना चाहता तो वो एग्जेम्प्टेड रहेगा. और जो इन छोटे राज्यों के लिए जो 10 लाख की लिमिट थी उसको 20 लाख पे रखा गया है. लेकिन इसमें एक ऑप्शन दे दी गई है जो पहले छोटे राज्यों को थी कि वो अगर 20 लाख के स्थान पर अपनी लिमिट रेज करके 40 लाख पे लाना चाहे तो वो ऑप्ट आउट करने की उनको डिस्क्रिशन दी गई है. दैट इज दे कैन मूव अप, जैसे पहले भी कुछ स्टेट्स मूव किए थे. कोई ऐसे राज्य, क्योंकि एक आध ने कोई ऐसी व्यू रखा था.
Okay, so the changes that have been announced are on expected lines. This is what our colleagues had been reporting. Just to very quickly recap this, the compensation threshold itself moves from 1 crore to 1.5 crores. And now those who are within the services domain, even they can take the benefit by paying a flat rate of 6% of tax. So those who are providing services or services plus goods. So again, this is something that our colleagues had been reporting. And the exemption limit itself has moved from 20 to 40 lakhs as well. So you can be completely out of the GST net if your turnover is below 40 lakhs. Anyhow, on that note, let's resume our conversation with Krishna Sangvi, Head of Equities at Canara Robeco Asset Management. Krishna, we were sort of, discussing some of the sectors that you're more optimistic on. So as you're looking at 2019, what are the biggest overweights for you in the portfolio?
No, I guess going ahead, we having corporate banks as one of the biggest overweight, thought process in the portfolio implemented right now. A broad idea really is that corporate banks are coming out of last 3-4 years of some sort of a trouble on the business front in terms of asset quality pains. Last couple of years, big changes have happened in terms of insolvency bill, the NCLT process for change of management. Some of those things have really tilted the dynamics back in favor of lenders in terms of trade, or you call it the bargaining power vis-a-vis the borrowers. All the asset quality pains which were possibly expected or hidden at some point of time have been uncovered or reviewed by RBI also. To an extent, we coming from a situation where what was the expected pain of last 2-3 years has been formally recognized. Companies are making the right kind of provisioning to come out of those asset quality pains, and on an incremental basis, they're in a far better situation going ahead, operating with a new growth path. In terms of credit costs, are going to come down significantly in the year ahead because they've taken the maximum pain of provisioning already. In fact, what will work out next year can also be a little bit of a recovery of some of the past provisions made. So to an extent, you expect corporate banking as one of the big beneficiaries as we move ahead in the year.
Okay. Krishna, hi. Good afternoon. Looking at your fund, there's a lot of exposure to consumption. Britannia is there, Lever is there, Asian Paints, Bata. I mean, across the board, ITC is there. For longest, we have been having this discussion. And what is the point at which you say, okay, the valuation is too demanding? We haven't reached that stage yet, you think?
No, in terms of, one is the valuation, other is some of growth prospects and the growth visibility. So if you equate the entire thing in a totality, in fact, you would have observed some changes made in the portfolio maybe in last 3 months, 6 months perspective. The absolute weight in some of those stocks or sectors would have come down. But if you still look on a relative basis with the kind of demography India has, kind of growth prospects for these people, they also, in a way, the beneficiary as more and more, lifestyle improvement happens in the country. Formalization of economy. These are the companies which are going to grow. Within the lot, we perhaps are liking something more on the consumer durable side, etc., where these are the spaces where the potential to grow is far higher. Where you look at air conditioner as a category, look at washing machine as a category, and you see a reasonable potential for growth for a far longer visibility. So consumer as a consumption basket as a whole, whether you call it staples or discretionary, is something which we like. We do believe there's a space which is going to grow. Honestly, you're right. Valuation is something this has been going on in terms of trade, but these companies are doing well on their own, have an excellent balance sheet, have their own pricing power vis-a-vis their customers. They are the companies which have clean balance sheet. So to an extent, some of those issues are getting addressed through a high quality balance sheet, high quality business franchise which they run. So that's the thought process there.
Okay, by the way, ahead of earnings, TCS is seeing big decline, and it's almost as if shots are being taken on TCS. Now, whether it's there's a case of everything being priced in, or is this a case of the market just being a bit adventurous ahead of a big number. But I'm just looking at the futures data over the last 5-10 minutes, Surabhi, and there are large trades which are being taken. I mean, almost 1 lakh shares, 2 lakh shares. That kind of, over the 5-minute bar, the volume chart, if you see on TCS. So obviously, there's been a bit of a selling on the TCS stock, which is quite interesting because you could say that TCS has been, a rank outperformer over the last 1 year. Or it's corrected about 17-18% from the highs. So this really could go either way for me. But just interesting the way the stock has started to fall.
No, I completely take your point, Anuj, because if shorts are going to get active ahead of an event when the stock is already entering earnings on a very lackluster, flattish sort of slightly lower note. It's supposed to be an okay non-event quarter for the company, 1.5% to 2% growth, flat margins.
Exactly. I think this could also be the case where perhaps the market is already now looking. IT was perhaps the tailwind, the rupee tailwind was last year's story. I think this year perhaps the market wants to back domestic stocks. I think there's enough evidence about that. It could be just that, but just wanted to point out there are some shots which have been taken.
Okay, fair enough. In fact, on that note, Harish, we will have to take your leave. Thanks very much for being with us on the show today.